So again, my name is Dave Wise. I'm with the Compass Options Text Alert Service and Live Trading Room. I have a live trading room. I also have a text alert service for folks who can't be in the room all the time or in the room at all to send out trades. And so you can trade along with us with the highest probability trade setups. No, hey Guy, you're in Helsinki. Cool. Michael, Philadelphia. Yeah, people from all over the world do trading. I have a lot of folks in my room from Europe, Asia. I have some folks from New Zealand right here, and I had some from Australia. So people from all over the world like to trade. Okay, we're going to get started here. Again, I'm Dave with the Compass Options Trading Room and Text Alert Service. So let's get going. The first thing I have to do, of course, is do the usual SEC disclaimer here. So again, all the signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. That's very important. If you're a trader and you run out of money, you can't trade anymore. Think of it as trading as your business. Money is your inventory. If you don't have any inventory, you're out of business. Again, trading is very risky, so you should never trade with more money than you can afford to lose. Neither myself or Right Line Trading are licensed financial advisors, so we won't be doing giving financial advice. All right, we'll move forward here. And again, if you have any questions that you want to learn more that I can't answer the question, put your name and number in the chat box or in the question box, or your Skype username. And Rory from Right Line will follow up with anybody who's got individual questions or questions on something that I can't answer, and he would be happy to answer that. So just put those in there. That's his phone number right there. I'll repeat this again toward the end. All right, this is just kind of a graphic of what we call a SPY super system. What we do here is we track institutional money flow. That's how I find the highest probability trade setups. And this is just kind of a fancy graphic to show that. What you're seeing here, by the way, is the Compass system on Thinkorswim, and I'll show you that. And again, this is a graphic of the alert service that I have. I send out alerts whenever we find high probability trades. And people ask me all the time how many trades. I don't have any idea. It just depends on whether there's good setups or not to take. We just sent an alert yesterday on IBM, and I'll show you that chart and why we took that trade. But this is basically what it will look like on your phone, and I'll go over the details of the alert service as we get into the presentation here. But basically it just comes out and tells you what stock we're trading, what option we're taking, when it expires, and how much to pay for it. Okay, the first thing I always want to cover, and if people have listened to me, they've probably seen this a few times, but it's very important to understand what drives the market, what drives us, the S&P 500, the triple Qs, the Russell 2000, what actually moves those stocks. And these little marbles here, these are us. These are us retail traders. I imagine everybody here is a retail trader. So we're small little retail traders. It's important to understand that we as retail traders, we cannot move the market. If we're in the market and the institutions aren't, we're just creating chaos and chop of the market. It chops around. There's no direction. There's no trend that you can follow. So you don't really want to be in there when it's just other retail traders. The big marble here, this is the institutions, and these are the folks that drive the market. And I think we all know who a lot of those folks are. It's Goldman Sachs, Morgan Stanley, JP Morgan, but also sometimes you don't think about things like hedge funds. There's dozens, hundreds of hedge funds with billions of dollars. So hedge funds are institutional traders. And so are mutual funds, T. Rowe Price, Vanguard funds. These are billions and billions of dollars in these funds, and they also can move the market. And pension funds, big pension funds for state employees, funds for unions like police unions, firefighters unions. These are massive amounts of money that get pushed into the market. And this is where the market movement comes from. And our job as retail traders is not to try to take money from institutions, because we're not going to. We have to take money from the other retail traders, and we do that by knowing when the institutions are driving a trade and when they're not, so that we can follow basically follow the breadcrumbs that the institutions are creating. And that's how we find the highest probability trade setups. So again, it's the institutions that drive it. If they're not in the trade, we don't want to be in the trade. And we'll be taking our money from other retail traders. I just kind of wanted to throw this is a chart of the SPY, SP 500. This is my, I used TC2000 as my charting platform. That's what this is. And then I also use TOS with Compass system on it for charting and for finding institutional trade, which I'll go over. But I just wanted to show you the difference between, these are regular candles on the S&P 500. This is a daily chart. This is as of yesterday right here. We've moved up this little white line up here. I've got, that's the all-time high on the SPY. And it's been kind of moving up, moving up. We had a little bit of a pullback yesterday. I have some lines on here that this is a 100-day moving average. This is the 50-day moving average. The purple line, it doesn't show, it just shows right at the bottom. That's the 200-day moving average. So we're above all the moving averages. This white line right here is the 8 exponential moving average. And the orange line here is the 15 exponential moving average, which is what I use to determine trends and when stocks start to pull back and bounce off of those levels. But I just wanted to show you, this is what the candlesticks look like with regular candles. This is the same chart with Heiken-Ashi candles. And you'll notice that Heiken-Ashi candles give you a much better indication of the trend. And we'll get into the Heiken-Ashi candles, but you notice in bullish trend, all the candlesticks have flat bottoms on them. And in bearish trends, they have flat tops. And that's one of the things that distinguishes Heiken-Ashi candles from regular candles, and it makes it much easier to see the trends. So we'll get into that. So in my room and in my alert service, I have what we call rules to trade by. Okay, and the basic rule to trade by here is we trade for the bet, we trade the best, and we skip the rest. We're only looking for the highest probability trade setups. We don't want to be trading mediocre setups or marginal setups. We want to trade when we have the biggest edge in a trade, which will give us the highest win rate and keep us out of trades that are going to cause us losses. The second thing is, and this is, people kind of look askance when I say this, because people with trades, we want to trade. But our objective is not to make trades. Our objective is to make money. Now, we make money by making trades, but we only make money by making the best trades. So you have to keep your eye on the ball, and the ball is you're trying to make money. That's why we trade. You know, we're not just trading to become, I don't think anybody's trading just to become in a competition for the best. You're in here to make money. Now, step 4, we need an edge. So how do we have an edge here in the Compass options room in my alert service? Well, we have these 4 things right here. Our edges. I use the Right Line Compass system, which is a piece of software that's going to identify when institutions are in the trades and when they're not. And I'll go over the charts and I'll show you how that works. But this is the important thing, is knowing when the institutions are in there. If the institutions aren't in a trade, I'm not going to take the trade until they are. We also trade relative strength and weakness. Now, this is not RSI. Some people think of RSI. That's an oscillator. I'm looking at if the S&P is moving sideways or down, and I've got a stock that's consistently moving up during that time frame, and usually we're talking about 5-minute charts here, then the stock has got relative strength to the SPY. And having relative strength is one of the indications that you've got institutions in the trade. And it also gives you the advantage of, if you take that trade and the market turns against you, it's not going to fall as fast as the market is because it has relative strength. And again, for the short side, we'd be looking for stocks that are underperforming the SPY. The SPY, for example, moving sideways or moving up, and the stock consistently moving down, you have relative weakness. A third edge, and this is if there is a market trend, if we have a trending market, and when I'm talking market, I'm talking about the S&P 500. If we've got a trending market, then we want to trade with the market trend. On a bullish trending day, we're much better off to identify stocks that are also bullish and trade at the long side. If we have a bearish trading day, we would look for stocks that are trending down and trade in that direction. And I'll get into this a little bit further because there's more to it than that. And also, we want to try to buy at a support level and sell at a resistance level. And this is important. This keeps us out of chasing stocks that would be considered momentum stocks, that are taking off and moving fast, either to the upside with stacked green candles or the downside with stacked red candles. We want to wait for those stocks to come back to a level that we've identified as support or resistance level, and then when they revert back into the original trend, that's when we want to get in. It keeps us from getting into a trade near the top or near the bottom, and for short near the bottom, and getting in near the top on a long and have it reverse on us and get us trapped in the trade. So those are the edges that we have generally. And now the compass system, which I'm going to talk about a little bit, but not a huge amount, but I do want you to know what we're using here. I use the compass system to identify probability trade setups, the highest probability trade setups, and then sidestep the setups that don't look good, that are going to fail more often. And I do this, the compass system does this by identifying when institutions are driving the move and when they're not. And I'll get into that. The compass system analyzes complex trading data. It really looks lots of data and displays the results in an easy identifiable visual format. And this visual element makes it possible for even new traders to find high probability trades. All right, so that we'll get into that in a little bit. I've got a question here. Manish, when I refer to support and resistance, do you mean SMAs, AVWAP on D1? And I assume the stock is strong, it must not be going down horizontal levels that we lose the strength. I mean, the support or resistance levels, and we'll get into this. I use, when I'm taking a trade, I'm looking at the daily chart and I'm looking at the 5-minute chart. The daily chart and the 5-minute chart, for me to take a long, they both have to be bullish. I'm not going to take a long on a bullish 5-minute chart with a bearish daily chart. So the things that I'm looking for on the daily chart would be, I'd be looking at things such as SMAs. I have things called algo lines, or basically trend lines that could support a resistance. So I want to see how close the stock is to that. But on the 5-minute chart, I'm going to be looking for things like the VWAP or a pivot point, something that would be support or resistance on the 5-minute chart. Saying it must not be going down to a horizontal level, otherwise it would lose strength. Yeah, I mean, if it was moving toward a horizontal support level, you wait for it to bounce off of that. All right, so let's move forward here. Again, getting an edge over retail traders. So who and what are institutional traders? Well, we discussed that. And we're only going to be taking trades that the institutions are in. We only want to be in trades that are being driven by institutions because they're creating the trend, and those trends are much more likely to continue. We want to trade stocks that have relative strength and relative weakness versus the SPYs, or in the case of tech stocks, the Qs. And we want to trade in the direction of the overall market trend. The overall market trend right now is bullish. I mean, the daily charts are bullish. We had a pullback yesterday, but the market trend is still in a bull market. When I first started the room in January of 2022, that was the first month of the bear market. So the overall market trend was bearish. So we had to lean to the bearish side for any kind of swing trades that we took. But day trades, we would just go with the market. And how does this give us an edge? Our trades obviously going to be supported by institutional buying or selling. Stocks will be outperforming the SPY, and stocks that are moving in the direction of the overall market. This gives us a big edge. And this is basically what I actually had a video on this, but basic high probability trade setup funnel. And what this means is when you look at a chart or look at a stock and you want to think that that this is a stock I want to trade, the first thing you want to do is you want to look and make sure the daily and the 5-minute chart align in the same direction. I mentioned this. You don't want to be taking stocks long because you have a nice bullish 5-minute chart, but the daily chart's bearish. You're trading against the overall trend, and it takes away any flexibility you have to stay in the trade for the day or overnight if you want to. We trade with the trend of both stock, the trend, and the market trend if there is one. Obviously, you want to trade with the trend. You got the wind at your back when you do that. Then the compass indicators need to be aligned. So we need to know that the institutions are in this trade right now on the daily chart and hopefully the 5-minute chart as well. And you want to trade relative strength and relative weakness and enter near support level or resistance level. If you drop tickers or stocks that you're looking at, tickers that you're looking at, and you run through this funnel, the ones that pop out the bottom are the ones that you can assume have a relatively high profitability rate and are high probability trades. So again, here's the funnel method for the highest probability trade setups, basically in text. Identify the market trend for the day, which takes till at least 10 o'clock or 10:15. If there is one, you want to trade in that direction. If there's not, you're obviously going to be looking at the individual stocks and not the market, because the market's chopping around. The stock to be traded should have daily and 5-minute chart aligned. We talked about this. The compass indicators must align in the direction of the trade. It's really critical that you have these two things. And that's very, very important. And you don't want to take a trade that doesn't have these two things. The stock, again, should have relative strength or relative weakness to the SPY. The stock price should be above the VWAP on the 5-minute chart for long and below the VWAP for short. Now, you want to enter the trade near a confirmed support for a long and near resistance for a short. And there should be no nearby support or resistance on the daily chart to limit the profit target. In other words, when you get into a trade and you look at the daily chart and your 200-day moving average is 10 cents higher than where you're at, you don't want to get into that. You're basically limiting your reward, so your risk reward gets skewed very poorly. And the key thing here, and I push this in the room every single day, is to have patience. It's really important to be able to not take trades when they're not set up for you. And this is really hard for a lot of traders to do, because they're sitting in front of their computer. They consider themselves traders. They feel like they should be in some trades. But a lot of times, not taking a trade is a much better option. All right. So this is just kind of an overview of the strategies that I use in my options room, which, by the way, I trade all day long. The room opens about between 9 and 9:15 in the morning. We start trading right at market open, and we trade all the way till 4 o'clock. So the room is open all day long. I'm in there all day long. I do take lunch, but I'm in there all day long, answering questions, pointing out stocks that are high probability trade setups, showing charts, etc. So of course we take straight calls and straight puts. This is obviously the most common thing we do. With long calls, long puts. We also do debit spreads using weekly options expiration. We just had 2 really nice ones of these this week. But using weekly options expiration on debit spreads. A little unusual for a lot of people. I don't think a lot of people think about when they do debit spreads using the current week's expiration, but these actually work. They have a better ROI than anything going further out in time. Over earnings, the only thing I do is what's called time spreads. It's a calendar spread, basically a specific calendar spread. And all we're doing is trying to capture the volatility crush when the earnings come out. Stocks have a very high volatility put into the premium, and basically the option premiums price is raised way up by the market makers because they don't know how much the stock's going to move or what direction it's in. And when the earnings come out, then that volatility comes out of the options, and this time spread that we do is meant to capture that volatility crush between this week and next week. I also have what's called a weekly ATM strategy. This is a strategy, I have videos on all of these, but this is a strategy that captures premium by selling puts against a neutral to bullish stock week after week while holding a much longer term dated put to protect yourself. So you're selling puts against a longer dated term put. So you create a spread basically, and so you limit your risk, and also you limit your margin requirements. And then I do trades called the SPY Super System. This is for very high probability trades to catch the SPY moves or the Qs. It's very specific. We don't get a lot of these, but we do have these. But I only call these out in the room. I don't alert on these because they're much too quick. 2, 3, 4 candles. Robert, time spreads are credits? No, time spreads are debits. They're debits. What you're doing is you're paying a debit, and when the premium drains out of you have a short call for this week and a long call for next week. As the premium drains out of this week's much faster than the next week's, then the call that you sold this week obviously becomes a lot cheaper, and you sold that one, so you can buy it back more cheaply. And next week's calls are not degrading as quickly. So the difference between the two is where you get the credit. So it's not a time spread is debit. We do credit spreads, put credit spreads. Like Bryce Radio, these are credit spreads to capture premium over a few weeks. These are standard credit spreads, and those are our credits to your account. Okay, so the alert service, what's it? What do we use? What's it for? Who is it geared to? Obviously, it's geared for day traders and short-term swing traders. These are not trades that I'm putting out. These are not investments. These are trades. We're traders, not investors. So these are for day trades and short-term swing trades. Some intraday trades, some overnight trades, some trades that can last 2 to 3 weeks, probably max on the short-term swing trade. Obviously, they're designed for traders who can't watch the market all day, working or whatever. And you're going to get real-time alerts on the highest probability trade setups. When I send out an alert, it's only going to be on a very high probability trade setup that we've vetted in the room, that I vetted in the room. We're sending out alerts, and we're taking the trade in the room. The highest probability trades we do by identifying institutional involvement, market internals, which tells us what the market's going to be doing. And then I do some deep technical analysis on the stocks to find out which one is the best. A lot of times I can find 4 or 5 what would be considered high probability trades setups, but by going into further technical analysis, I can find ones that are the highest of those, the best setup on those. This is just a cumulative P&L graph. This was actually from August through October, but we just put it up there to show this. This is basically what you want. You want a P&L that's going from the bottom left to the top right, and we're very profitable. So that's all that says. And I'm just going to cover, what I want to do is cover some of the results that we've had, just so you can get a feel for what we're able to produce and understand what your experience is likely to be with the percentage gains that you make on individual stocks and overall. But this was back here March through June. I haven't really updated this, but I do have results for the more current months coming up. But this is the trading room March through June of 23. Again, and I just put this up here just to show that the win rate you see is probably between 85 and 90% generally. But these 4 months, you can see the win rates were very, very consistent. Profitability changes around quite a bit because it depends on the market. How long can I stay in the trade? On a choppy day or a choppy market, you can't get the same kind of profitability that you do in a trending day. You stay in the trade less time if you've got a choppy market. But again, between 86 and 87.5, and those were our profits through those months. So about $30,000 through March through June. But again, this is getting kind of old now. And this is based, by the way, on investing $2,000 in each trade. So and that's just listen, this is just an arbitrary number. I have to use some sort of a baseline to do calculations to figure out approximately what we would get. I don't think anybody keeps this, I don't put the same amount into every trade. If I've got a trending day in the market versus a choppy day in the market, I'm taking bigger size. I mean, because the market is giving me the ability to take bigger size, but this just kind of gives you a baseline. So 2,000 in each trade produced those kind of wins right there. Derek, what was my outline for trade? Yeah, that was the outlay for trade. I'm assuming $2,000 in each trade. That's obviously if the options are $1, you're going to get 20 of them. If they're $2, you buy 10, whatever. That's just to keep that consistent. So I will go into I'll go through September through January, what the trades we've taken and what our win rate was. The reason I show these particular slides is obviously it's emphasized that we're profitable, but the key thing here, I want people to understand what our likely percentage gain is per trade. I mean, we all get the emails and watch videos of people telling you that you can make 100, 200, 400, 600, 1,000% on these trades that they give you. And I'm telling you that there is no consistent strategy that's going to produce 300, 400, 500% per trade. It's just not going to happen. You're going to have way too many losers. So what we look for here is if I'm in a day trade, for example, and I'm up 25 to 30%, and the market's chopping around, or the stock starts to go against me, I'm going to take profits. I mean, I'm going to get out. I'm going to take the money. So this was September. We had 25 wins and 2 losses. This is one of our higher win rates, 92%. But in this month, you see we had 23% on UPS, 43% in AI, 16% in Lilly, just a little bit, 5% here in Square. But we did have STX here. We had one big win that we got when we were in the trade. They lowered the guidance. We had puts on it, and that it really pushed it down. But again, 22% Pfizer. So you can see that what the percentages are, generally between 15, 20, 25, 30, up to around 40%. And we have losers. Be aware. Not every trade is going to be a winner. There's going to be losers. And the Amazon, this was a news report that came out against us. But I mean, those things happen, and there's not too much you can do about it. But here, 2,000 invested in each trade created. Each trade created 77.88. Pretty nice month actually for us. And it was a very tough month. I made a comment here that this was a very tough month to trade. This was September was not an easy month to trade. So that was a pretty good month for us. Here's October. Again, you see the percentage gains very similar. 32, 20, 23, 33, 29. I mean, 61 in JD. So it's, again, they're all over the place. And we had 4 losses. I think I just put 3 of them in here, but just to kind of give you an overview of what we're winning here. Again, we had an 86% win rate, but our profit was down to 44.80. It's not, I should say down. It's still a pretty good month, but that's what we did. And it really, a lot of it just depends on the market. November, again, 21 wins, 4 losses, 84% win rate, a little bit less. You notice win rate was a little bit less, the profit was a little bit higher. But you're seeing here the percentages that we make. I mean, it's fairly consistent month after month. It always falls within the range. We just have to take what the market will give us. That's really what it's doing. And somebody's asking, is this using spreads? It's got multiple things. There's a put credit spread here. This was a strangle here. This was a put credit spread. Anything that doesn't have anything, these are straight puts and straight calls. In December, we didn't take a lot of trades in December. We only had 16 trades. It was a lot of holidays, a lot of choppiness in the market. There wasn't a lot of good opportunities. So I couldn't take a lot of trades. There weren't a lot of trades, but and we didn't make a lot of money. We made 3,100 on it. But still, again, you see 25, 24%, 36%, 25%, 63%. All of, these percentages remain consistent month after month after month. This is my 26th month since I started this with the service. 26 months. We've had 24 winning months, 2 small losing months, and so far February is profitable. And this was only 3,100, but I mean, still $3,100 is not bad. This was our January trade. January was really kind of a bang up month here. I did have 1 loss that's not in here because we didn't actually close it till February, but you can see the closed trades at the end of January. We had 20 wins and 0 losses, and this is a little unusual. Generally, I don't have 0 losses in a month. I think this is the first month I've ever had 0 losses. But we did have 20 winning trades. Since we had some credit spreads here, debit spreads, time spreads, you can see. And again, with the percentages, you see how consistent they stay. 43, 37, 32. You don't see 500, 700, 8. You don't see these massive amounts of percentages out here. So I want you to be aware of what the expectation is on the profitability that you'll be getting on these things. You're not going to make 1,000% on trades. If you're going to be a consistently profitable trader, you have to be consistently profitable. You don't want to be jumping up and down with up 1,000, down 1,000. It's just not worth it. All right, so that was the January trade. So that runs through the trades. Again, this was just assuming 2,000 invested in each trade. These are some of the specific trades I put out on alerts. I just wanted to list them here. Recently, we did crowd. We get in for $6.90. We held it overnight and get out for $8. Again, 16% profit. STX, this is when we get in for $3.70, out for $7.70 when we had when they lowered guidance. We were in it for 2 days. That was 108%. But again, these are the same kind of trades you saw over there, but these are specifically texted out. And I wanted you to see that some of these things we get in the one day and out the next, like this. BNTX in for 81, out for $1.21 the next morning. That's a 50% profit. Run 33 to 43 out the next morning. But then we had other ones in here that we were in for just the same day. There was some more in here. This was Workday. We did this very, very recently. In for 370, out for 1470, 26%. Doesn't sound like much, but it's $600 on 2,000 invested. So these are just the list. This was a put debit spread we did here. that should actually say a credit spread, not a debit spread. It was a put credit spread. We got us a $50 credit. We closed it for a dime, so we made $40 profit on a maximum of 50. That was a particular credit spread. So that just kind of shows you the results that we get. And again, these were actually alerted trades. So this is just an overview of the whole 2023 trade results that I wanted to show people. People want to know, how much can I expect to make? What did the methodology produce? And listen, these are not cast in concrete, because everybody's different. Everybody's going to get in at a different price, out at a different price. They're going to put different sizes in. They're going to trade differently. They're going to get spooked out of a trade, whatever. But this is what we produced. So 2023, and using just 2,000 per trade, investing 2,000 in each trade taken in our room, I produced a profit of 60,000, basically 60,000 true away. So if you had an account balance of 50,000, again, these are arbitrary. Each trade used 4% of your account balance. The percentage used was lower as the account grew, of course, and it produced 120% return on the initial $50,000 account balance, growing the account to 110,000 at the end of the year. And I think, for me as a trader, this is pretty spectacular. I mean, if you can make 30 or 40% on an account in a year, that's pretty good. To do 100% in a year is outstanding as far as I'm concerned. And again, at the end of the year, if you were putting $2,000 in each trade, now that 2,000 was less than 2% of your final account balance. All right, let's see if we got any questions here. Those are also using 7-day options. A 7-day options is most of the puts and calls that I do, Derek, are not, they don't expire 7 days unless it's a time spread or a debit spread. Most of the trades that I do, I'm going to go out probably 3 weeks, 2 to 3 to 4 weeks in time, because I don't want to have a lot of time decay. So I take puts and calls that are in the money, always in the money, anywhere between 65 and 75 delta, and they expire usually 2 to 4 weeks out normally. This is good for carrying over 2 to 3 weeks. Yeah, it is. I mean, if I'm in a trade, we were in a GE trade not too long ago, and it took about 2.5 weeks to get profits on it. But I mean, if I'm into a trade and I make 40% on it in the first day, then I'm gonna go ahead and take profits and take the overnight risk off, and then reevaluate the next day. But a lot of our trades were in for a week, 2 weeks, sometimes 3 weeks. All right, so again, this is just about the alert service, what you get. Obviously, we're trading the best, skipping the rest, as I keep saying. Every alerted trade is going to include the stock symbol. Obviously, it's going to show you the symbol, the option strike price that we're taking, the option expiration date that we're taking, and the price to pay for the option, which could be a range. You could say pay $1 to $1.10 or something like that. Now, most of the time when you get the alert, it's not going to include a sell price on it. The sell price is going to come out on a different one, because I don't know when I get into a trade. I have an idea where I'm at, what profit I'd like to make, and where perhaps I'm going to exit, but I'm not going to put that in there yet, because I want to watch the price action. It could be much better, it could be much worse. Once we decide we're going to take profits in a trade, then I'll send out an alert with the sell price, and you want to set that up as a good till canceled order, because you want it operating effective when the market opens the next day or the day after that. You always want it good till canceled. If I'm going to change it from there, I'll send you an alert to tell you there's a modification in the exit price. So again, let's talk about how we achieve these stunning results we just looked at. Obviously, we keep saying this. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish in our favor. So we only take trades when both of these are in a favor. Now, if the market internals aren't in my favor, they're just choppy, there's no real good market internals, then I fall back on just the institutions. And when the institutions are in a favor, then we'll take the trade if the market internals are neutral, because the fact is the institutions are still pushing that stock. And the institutional money flow is something I'm going to talk about here, but this is really, really important. And this is what I use the compass system to find, and I'm gonna go through that with you here in just a second. But by putting all this stuff together, I'm able to find the highest probability trade setups. And so are people in the room. Once they learn how to do this, that's what the room is for. It's to help people become better traders and find high probability trade setups. Okay, how does the compass system identify when institutions are creating a trend? Well, the compass system does what's called the triple screen assessment. And this is a fancy way, some people call this fractals. This is a simple way, or a more complex way of saying multiple time frames. We're looking at a stock, we're looking at multiple time frames, and we're looking at the momentum over the multiple time frames, the trend over multiple time frames, and the money flow over multiple time frames. So when all of these things are all lined up in the same direction over multiple time frames. For example, on the 5-minute chart, we look at the 5, the 15, and the 45. So if you've got the 5, the 15, and the 45 all bullish on momentum, bullish on trend, bullish on money flow, the likelihood that the institutions are in that trade driving that is extremely high, well into the 90s, 90% likelihood that the institutions are driving that trade. Manish, when you say market internals, you mean ticker, add, VIX? I mean, yeah, I have a piece of software that looks at market internals. It's really looking at the number of stocks moving up on up volume and upticks versus the number of stocks moving down on down volume and downticks. And if there's a big disparity one way or the other, that's what I consider market internals. But you know, people use ticks. You know, they'll use tick as well. I'm not looking at the VIX. You know, but some people do use ticks. All right, so this is I'm gonna show some Heiken-Ashi charts, and then we're gonna look at the actual Heiken-Ashi candlesticks and how we use them in trading. And then at the end of the webinar, I'm gonna get into some of the specific trades we've taken and you can see it on the compass system, and I'll show you what we were looking for and how we found them. But this is actually a trade we did take on the compass system a while back. But this is a Tesla, a 5-minute chart, and these are Heiken-Ashi candles right here. And Heiken-Ashi candles we're going to get into in just a minute of how they're constructed, but they're different than regular candles. And as I had said earlier, Heiken-Ashi candles have flat bottoms. When you go from a wick and a tail like this on this candle to a flat bottom, that's what's called a Heiken-Ashi bullish reversal. And you notice in this Tesla sample I've got here that each one of these candlesticks, these are all Heiken-Ashi candles, each one of them have a flat bottom in them. Every single one is a flat bottom, because that shows you how easy it is to see the trend. Heiken-Ashi candles, bullish, always have flat bottoms, and bearish have flat tops. Now, if you're in this trade and then you start to see this, you know some of the momentum starting to wane, and maybe you want to take profits. And this, by the way, is the graphic view of the compass system. This is a multi-time frame trend. This is multi-time frame momentum. This is current time frame momentum. And this is a type of money flow indicator right down here. But you see how all of these things were green, so we knew we could go long. But the point here is to show you what the Heiken-Ashi candles look like. Derek, am I using seasonality at all? No, I'm not using seasonality. I mean, listen, I've studied seasonality. I've tried some services that use seasonality. I'll tell you what the problem with seasonality is. If somebody tells you that Occidental Petroleum on general goes up 90% of the time between September 1st and November 1st, and so 90% of the time it's going to go up, so you buy it in September. The problem is, if the stock goes up 10 cents between the 1st of September and the 1st of November, that's a win. That's part of the 90% gain. But if you're in options on that, you just lost your butt. So I don't seasonality. I mean, seasonality is going to be reflected in the charts anyway. Okay, what does RLT stand for? That stands for Right Line Trading. That's the company that actually produced the software that produces these charts. All right, so let me move along here. Let's talk about Heiken-Ashi candles' advantages over standard candlesticks. And this is one of the things I really want to get people to understand, because a lot of people may have heard of Heiken-Ashi, but they don't know how to use them. This is Heiken-Ashi candles. They identify confirmation of trend reversals. This is a big deal, because when I get into a trade, and I'll show you some, when I get into a trade and I'm waiting for the stock to pull back to support, like on the 5-minute chart, I'm waiting for it to go back and touch the VWAP, all right, the volume weighted average price. How do I know that it's reversed and gone back up into the into the trend again. If I'm looking at regular candles, it's much more difficult. If I'm looking at Heiken-Ashi candles, as soon as I get a Heiken-Ashi reversal, which would be a candlestick with a tail on it, followed by a green candlestick with a flat bottom, that's a Heiken-Ashi reversal. The confirmation back into the original trend has been confirmed. So that's a big deal on getting into trades. It obviously allows trade entries on a confirmed reversal, avoiding failed breakouts. And this is a big deal because if you get a stock that bounces off support and you jump in, or even if it breaks through resistance and you jump in on the first candle that you see, I'm sure you've experienced what's called failed breakouts. It pops up a candle and then it reverses right back down again. Heiken-Ashi candles will cut way down on those failed breakouts occurring, so you're not getting in until after it's confirmed. Sometimes you'll miss a candle to the upside it's because you're not getting in as early, but you're also going to miss a lot of failed breakouts. It smooths out the price movement to eliminate noise, allows the trader to stay in the trend longer, avoiding shakeouts. Again, there's not so much noise on it. So if I know a lot of traders, they watch the 5-minute chart and they freak out when they start to see a red candle or it goes down 1 or 2 candles against them, and they start to freak out. They think they're going to lose money. They bail. This will keep you. Excuse me, just a second here. This will keep you in the trade longer, and you won't get shaken out by these noise. You know, one of the things I recommend traders do is not to be watching their P&L when they're trading. Don't look at your P&L, because what you're doing is, if you're looking at your P&L, is now your trading methodology is being based on how much money you're up or down. But your trading should be based on the technicals of the stock. You get into the stock for a particular reason because it's bullish, and then if it goes against you but it's still bullish, and you bail and lose money, or let's say it bounces back up and you're back profitable. The example I use is, if you're in a trade and you're up $300 and then it pulls back and now all of a sudden you're down 150 bucks on it. Now the chart's still the same, it's still bullish, and then it bounces from down 150 to up 100. All right, so now you're saying, okay, now I'm making money. Now it drops to 50 again. What happens is, if you're watching your P&L, you bail on the trade right there. Now the stock just reversed and confirmed that this is going to be a good trade, but you get out because you were watching your P&L, not watching the technicals on the stock. And that's a very bad way to trade. You're trading emotionally, you're not trading technically. All right, so and again, it identifies waning trends momentum, so you can exit profits, and it makes it much easier to visualize the current trend. So we're going to talk about these and how they work. So again, if you've not used Heiken-Ashi candles in your technical analysis, you may want to try to use them to improve your trading. And Heiken-Ashi candles, it means average bar in Japanese. It uses 2 candles to create a candle, and it smooths out the price action, so identifying the trends and reversals is clearer, since they eliminate the noise and make it easier to see trends and stay in the trade throughout the trend, allowing for improved profits. This is a big deal. Bullish Heiken-Ashi candles have flat bottoms, and bearish have flat tops. Bullish trends will have flat bottoms Heiken-Ashi candles one after another, as we've seen. Bearish trends will have flat topped Heiken-Ashi candles one after the other. And generally, you can stay with a bullish trend as long as no flat topped Heiken-Ashi candles appear, indicating a lull or reversal in the trend, and vice versa for bearish. Okay. Now, reversals on the bullish trend will have a flat bottomed Heiken-Ashi candle, followed by a smaller doji Heiken-Ashi candle, usually, and having both wicks and tails, followed by a flat top bearish Heiken-Ashi candle. That's a bearish reversal. And vice versa on the bullish side. Obviously, you'd have a candlestick with a tail followed by a flat bottom. And again, the doji candles indicate momentum is slowing and time to be prepared to take profits when a bearish Heiken-Ashi candle appears. And this is kind of important. If the trend that is ending had many long bullish Heiken-Ashi candles, big green candles of Heiken-Ashi candles, the reversal will require a long bearish Heiken-Ashi candle, more than one, to confirm the reversal. You don't want to be exiting a trend or getting into a trend if you had big candles coming one way and you're just getting tiny little ones reversing it. You don't have the momentum yet to offset what was creating original momentum. One thing to be aware of is the price on the stock on the Heiken-Ashi chart won't reflect the actual current price because of the way the Heiken-Ashi candles are calculated. So be sure to check your regular chart to see what the price is. It's only going to be off by a few pennies, but it will be a little bit different. Okay. And again, I've traded a lot of Heiken-Ashi reversal setups and had about a 90% win rate with them. And we just covered what that is. Okay. Again, obviously, this is some of the things that go into looking for your exit points. You want to check for anybody near size support and resistance. That was part of the high probability trade setups. Now, obviously, when you look at the Heiken-Ashi candles, you can't use any indicator, including Heiken-Ashi candles. You can't be taking them in isolation. You know, you can't say, okay, I'm going to just take Heiken-Ashi reversals and trade. It's not going to work. You have to take a look at all the other things that we're talking about, which would be compass system. So here we go with the relative strength, the relative weakness, Bollinger Bands expanding, and the compass system, which shows me that. I'll show you that in a minute. That tells you that a compression has been broken. And the final criteria, which is critical, is assuring that the institutional traders are supporting the reversal. This is, again, right, comes back to what you need to have. You need to have institutions in the trade that you want to be on their side. And I do recommend when you're in a trade and you're looking to get out, once you start to see a reversal to the opposite direction with the Heiken-Ashi candles, switch over to regular candles, because you're going to be able to save yourself a little bit of extra time, because once you've decided that you're going to exit, you can see on the regular candles whether the trend is really ending or not, and you can get out before the next Heiken-Ashi bearish candle is created. You would or have already exited. Again, you're going to think you're going to try them reversals very profitable if you're done correct, if they're done correctly, obviously. So I'm going to show you, this is just a graphic of Heiken-Ashi candles, just so I can explain a couple of things to you here. This is a bearish trend. You can see the flat top, and then a wick and a tail, another flat top. Now this would be what would be considered not a Heiken-Ashi reversal, but a Heiken-Ashi confirmation. You see, you're coming down. Now you don't know whether you're going to turn around, go back up again here, and now you get another flat top candle. This is a confirmation that you're still in the downtrend. So that would be a Heiken-Ashi. Whoops, what happened here? This would be a Heiken-Ashi kind of a reversal. It's really not. It's what's called a Heiken-Ashi continuation. So now we're coming down. We're bearish, 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 bearish. Now we get wicks and tails in a green, wicks and tails in a green, wicks and tails in a green. Now we get a flat bottom Heiken-Ashi candle right there. Right, that is a Heiken-Ashi reversal to the bullish side out of this trend. Now, one thing to notice is every single Heiken-Ashi candle starts at the middle of the previous Heiken-Ashi candle. See that? Starts right in the middle. Every Heiken-Ashi candle starts in the middle of the previous candle because of the way they're constructed. But here you can see the Heiken-Ashi reversal. It's still going, it's still going, it's still going, it's still going. That's a bullish trend. All right, so that's what they look like. And then you can put them on any platform. This is, again, the Tesla one I just showed you a little earlier. Excuse me. This is one in Gilead that we just took not long ago. This is a daily chart. And this was a bullish Heiken-Ashi reversal right there. See the little wick in the tail, flat bottom. That's a Heiken-Ashi. You can see everything was green. Now, this was GE. This is the one where I told you we took a while back. We were actually in this quite a long time. But this is the daily chart. But this is where we took it right here off of this Heiken-Ashi reversal. See the red candle with the wick and tail, flat bottom. This was GE, and we took profits of that. But we had to stay in it a couple of weeks because it chopped all over the place. This is the trade we just took yesterday. This is the IBM trade, and this is my TC2000 chart. Now, if you see here, I have my candlesticks are colored differently because in TC2000, I actually changed my green to blue if there is a compression break or the Bollinger Bands are expanding, and I change it to pink if it's a down move and the Bollinger Bands are expanded. But what we had here is this was on earnings in IBM, this big pop right here, and I'm going to show you this on a regular chart in just a minute. But this was a Heiken-Ashi reversal right here, and then it kept after earnings we had a big Heiken-Ashi candle, and then the stock just kind of compressed down. This is what's called the bull flag, and this is an algo line. This is a line that the institutions use to look for breakouts. See how it comes right down here and touched it, touched it, touched it, touched it, pulled back, broke through it on Friday with a Heiken-Ashi candle reversal. That's a wick and a tail followed by a flat bottom coming out of a trend. So we took this long yesterday, right? This was an entry off the daily chart right there. And this was Teva. This was one we took a while back. We're already out of it. We get in on 214, which is right here. You see how the stock's moving down, create a Heiken-Ashi reversal right there. And we follow the trend up and we get out. I think we got out about here, but we made some nice money on Teva on this one. It's not a fast moving stock. You can see that the prices is pretty small on it, but this was another Heiken-Ashi reversal that we took and we took it long and it worked. All right, so I'm gonna drop the slide presentation for a bit and move over to some real charts on TC2000 to show you these. Let me just see if we get any questions here. Daniel, common for you to be up 100 and instantly down 500. Yeah, I know. We've all been there. We've all been there. The problem is you can't let the P&L just make a determination of whether you're going to stay in the trade or not. So you should not use Heiken-Ashi candles for deciding the exit. I don't. I switch to regular candles to exit just because I'm trying to exit a little bit sooner. Because once I know I'm going to get out, then I don't really have to wait for the confirmed Heiken-Ashi reversal unless I'm staying in a particular swing type trade. Then I'll just stick with the Heiken-Ashi candles until I've decided to get out. You believe one of the advantages for using Heiken-Ashi candles is it can keep you in a trade for optimal time. Exactly. But you have to look at regular, so here the momentum is waning, then we won't lose that. I would suggest moving to regular candles once you've decided that you've got the profit that you want and you're thinking about getting out. Not if you still just want to stay in the trade. No, I would wait for the Heiken-Ashi reversal on the 5 minutes to actually occur, or on the daily chart for that matter. All right, so let me see if I can take this off. All right. They want to drop this thing, but I haven't been able to here yet. Oop. Okay, I'm going to look at some live charts. So let me pop this down. Let me bring over my TC2000 because I want to show you some individual stocks. The first thing I'll do is I'll go ahead and, again, this is the daily chart. This is my TC2000 chart. And I want to look at some specific ones. But I want to look at Netflix. All right, so this is Netflix. This is one that we actually took a call debit spread on. Now, this is a daily chart right here. And this line right here, you can see this was a double top. This was a horizontal resistance. You see how it broke through right here, all right, on 15th. But this is actually where we took the trade. You see this Heiken-Ashi reversal right here? Let's switch over to Heiken-Ashi candles. Here's the Heiken-Ashi reversal candle right there on 214. That's where we took the debit spread on this weekly debit spread, and you can see that it moved up. You see the flat bottoms. This is Netflix. This is one we took. And I did show you the IBM one. Let me show you the IBM one here. Is IBM is a regular chart on IBM, right? Same thing as it looks like before. And here's the Heiken-Ashi on IBM. See the Heiken-Ashi reversal candle right there, breaking through this trend line. And this is on the daily chart. This was what I'm considering a swing trade. I may get out of it on Tuesday if I make enough money, but this could stay. We could leave this on for a while. I have the earnings day here not till 4/17, so I don't have to worry about earnings coming up. Right, so that's a Heiken-Ashi for IBM. Now, I'll show you some more examples. Some charts I just pulled up is XLE. Now these are charts that have Heiken-Ashi reversal candles occurring yesterday on Friday. This was a Heiken-Ashi candle on the XLE, basically the energy sector. Here's the regular candlesticks here. A couple things I note when I see something like this. Here's the 100-day moving average. The 200-day moving average is purple. 100 days blue. See, it's popping above the 100-day moving average. But it's still like a little doji candle there. And here's the Heiken-Ashi reversal on XLE. So that would be one I would look at Monday if I wanted to trade it an ETF. VKTX. Again, Heiken-Ashi reversal right here. And this one actually just got approval yesterday from the FDA. But you see how you can see these patterns. Even if the candle goes red, you see how the bottom is still flat. It's still flat. So that was a Heiken-Ashi reversal on VKTX, and here's the actual chart. IBM I showed you. Lilly is one that's been just running away wildly lately. Again, here's the Heiken-Ashi reversal candle right there. See, it moves up. Now, you might want to take profits right here as it slides along. You'll notice, by the way, that on this 8 exponential moving average, I like using this for trend on my TC2000 chart because the stocks tend to follow that up or down. So here you have compression in Lilly, and here's the Heiken-Ashi reversal right there. And then it compresses, and then it continues with Heiken-Ashi candles, and we just put in another Heiken-Ashi reversal right there coming out of this compression. Here's some Lilly, and here's RELX. I just happened to bring up on yesterday. It's a pretty choppy stock. You can see it's a ADR. It pops all over the place. They do trading overseas on this thing, and it's up and down, up and down. But if you notice here that this candle here is a Heiken-Ashi reversal, and you notice the last time it did a nice Heiken-Ashi reversal right here, it followed up for a good long time. So that could be the beginning of a trend. And what you would do is wait to see if you get confirmation of that on Tuesday morning. We have some shorts here. We did a UPST. We took this short the other day. You can see the Heiken-Ashi reversal right here at the 200-day moving average. Let's move over to the regular chart. See this gap down. Now you notice, by the way, the Heiken-Ashi candles do not have gaps. They don't have any gaps. All right, when you get a gap down, it's basically going to create a flat top. So that's what you get right there. So we took this to the downside right here. We traded it this day and this day, and we get out. Now that's an algo line right there that I've got in my TC2000 chart, and you can see that it's right down at near support. So when it gets down near that level, we take profits. Twilio, another beautiful short. Okay, here's a regular chart right here. Here's a Heiken-Ashi chart right here. See this nice follow through to the downside. See this nice Heiken-Ashi reversal bearish right here to the downside. And you just get out. Heiken-Ashi reversal to the downside. Boom, 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 boom. So that's why I continue. I think this thing is going to continue on down. I actually took it yesterday, intraday, and I took about 40% off of it and closed it because I want to see what it does on Monday, because it's a Tuesday, because it's so far away from this 8 exponential moving average here. All right, let me see if we get any questions here. Let's see. On IBM trade, may I know where you would put your stop? I see it has lost strength intraday for a while. Would that be an indicator to exit the trade if my day trading? Well, the question is, if you're day trading or you're swing trading, there's a big difference. IBM, I'm in on a swing trade. I don't care what this does, as long as the stock stays above the 8 and the 15 and stays above this trend line. I don't care if it bounces around. I don't really care on the 5-minute chart. I'm only interested in the daily chart. So when I'm looking at Heiken-Ashi candles, I'm just watching the daily chart to see what it does, and I'm watching the daily chart for this. If you get into a trade based on the daily chart, which is what I do on most of mine, then I'll take profits during the day if I've got them, but I'm not going to take a loss unless it's broken down below resistance. So that would be my stop on IBM. It would have to be down here somewhere, because you see this bull flag. This is a big bull flag. So this is about as low as it's gotten. So I would have put my stop somewhere down right there around 183.07. You want to know how to set up the Bollinger Bands to get the colored candles, Sarah? Well, TC2000 allows you to do that. I won't go into it here. If you contact me through Rightline, I can show you how to do it. They have TC2000 has a lot of flexibility in doing candle creations. You see all these white candles? These are my volume candles. I've got it set up so that they're made white when they exceed the 50-day moving average on volume, so I can see quickly if the stock has got a higher volume than it normally does. It gives you a lot of that kind of flexibility. But going into the details of TC2000 and how to create the setups and everything would take way too long. HA reversal on D1 is more reliable than a 5. Or can you use Heiken-Ashi reversals? No, you can use it on the 5-minute chart. Yeah, if you're day trading, absolutely you can use the Heiken-Ashi reversal candles for day trading, if you're intraday trading. But you'd really still want to have the daily chart set up. It doesn't have to be a Heiken-Ashi reversal on the daily. It does need to be bullish, but you want to have your stock bullish. But yeah, I mean, you can intraday trade off the Heiken-Ashi, especially if it's bouncing off a support level, absolutely. Can I scan in TC2000 for Heiken-Ashi candles? I can. Yes, I can. Yep, Heiken-Ashi. I can scan for Heiken-Ashi candles in TC2000. In my trading room, I have the compass system up, which you can buy, but it has a scanner in there, and I have a scanner for daily Heiken-Ashi reversals as well as a momentum in there. It's one of the scanners that's in there. But TC2000, I can scan for anything like that. Okay, so let me see what else we got here. Let me look. DVX, I wanted to point out DVX. Again, I just want to give you a lot of charts to see. These are real charts from Friday. Now here's DVX on a regular chart. See this big gap down, drop box. Likely earnings, you see the big volume here. Let's look at what Heiken-Ashi, see what this is showing me? So is this something I might want to take a short on Tuesday? I'll definitely take a look at it. The only thing to be concerned about is how far it is away from this 8 exponential moving average. All right, that's one of the things I use. I use the distance from the Heiken-Ashi, I'm not Heiken-Ashi, the distance from the 8 EMA to determine whether the stock is too far extended. Doesn't mean it can't keep on going down, because Twillo was too. But that's why I stayed in Twillo just for the day and then get out, because I want to see what happens on Tuesday. Now, let's see, got a couple more to look at here. A QDEL, you're going to see QDEL, same thing. Heiken-Ashi right there, boom. This was a gap down, but see how smooth that drop, that move to the downside is. Just one right after another. I mean, these are really no sweat trades when they follow like this. I mean, this was an easy one. Twillo was an easy one. You know, for me, Twillo was really an easy one. If I go to the 5-minute chart on Twillo, let's go back. Here's Twillo, gap down, and it's just been moving along down all the time. Gap down again, and just kept moving down. Just nothing big, but nice, smooth, bearish action here. And there's Heiken-Ashi candle up to the 5-minute for Twillo. Let's look at the 5-minute. Here it is intraday. See, if you're trading in intraday, see, here's a Heiken-Ashi reversal right here, falling below the 8. Nice move down. Then you can take profits, chops around. Another Heiken-Ashi reversal to the downside, chops around. Another Heiken-Ashi reversal to the downside. So you can see how these work. Doesn't matter what time frame you're using them on. Adobe's another one. Again, another earnings trade. Big gap down, right? Look at the regular chart. It's actually a pretty small gap down, and then a move to the downside. But Heiken-Ashi is going to tell you that you got flat top, little choppy, flat top, flat top. See over here, you got a flat top right here. See how usually when you get a flat top candle, it's pink or blue. And pink or blue, I've got coded to show me whether it's a Heiken-Ashi reversal or whether it's Bollinger Bands expanding. Once you usually get one of those, it usually follows through. I mean, if you look at this, you see you've got follow through, follow through, follow through. You get follow through here. Sometimes you'll get chopped, but a lot of times you won't. All right, and here's CAR. All right, so there's Heiken-Ashi on CAR. Oops, there's regular candles on CAR. All right, so this kind of gives you a flavor for these Heiken-Ashi candles and what they can do for you. Here's ZM. Again, this is a daily chart. That's Heiken-Ashi on the daily chart. You can see how you get a reversal right here. That's a pretty decent place to actually take a short on ZM, which yesterday afternoon right there off of that candlestick. All right, so let me go back to the webinar here. Just give me time to get back to where we are. I'm sorry about that, but I did want to go to some real trades so I can show you that. All right, so I'm going to continue on here right now. So these are some of the trades we've taken, and this shows you how I use the Compass system to make these things work. This is workday that we took a trade in right here. You see what I was looking for, and it's actually not right. It was actually right here. We took it as it came out of the slide gets shifted. The arrow should be right there in this dynamic compression break. This is a compass system produces this dynamic compression zone right here. These are Heiken-Ashi candles, by the way. You can see that it's breaking out of the zone and moved up pretty nicely. And we took a nice 30% profit in 5 days. We were in the trade for a while on that one. This was MDT. Another one, again, you can see all green and blue down here. So I know all of my indicators were telling me the institutions were in there. We took it here, not a fast moving stock. This was a medical device company, but we took it right here as it came off this 15 EMA. This is a 15 EMA. Again, this is a support level or resistance level. We took it here and we had to hold it for a while, but we get 25% on that. The VKTX, this was a nice one, 30% in 3 days. We took it right here on this, as everything went to green, it bounced up and we took it right here. And as it broke above resistance, and we took it for 3 days, 30% profit. And McDonald's, this was an overnight trade. We're in for 8:30 and out for 11:30. $3 profit per contract, 37% gain. We took it right here. The compass system is all green, and we know the institutions are in there. We're looking for a break out of this dynamic compression zone right here. This is a compass system produces this dynamic compression zone. We took it here, we held it overnight, boom, we're out the next morning right there on that nice little move up on McDonald's. Moderna this was a nice short one. Again, we do short, we do long, we don't care. We just want to do something that's going to make us some money. And this again was a breakdown. If you can see this 15 EMA, this little thin line, again, this is another support resistance level, and we had a dynamic compression zone, this little shaded area. So this is where we took the trade right here, and we took 33% profit in this little stock. Again, you notice everything's red or yellow. Institutions are selling. Amazon, institutions are buying. The multi-time frame trend hadn't shifted yet because we had so much chop here, but I liked it good enough to take it. And we took 32% profit on that one candle. We just stayed in it for 1 day on Amazon. JD, 61% profit coming out of dynamic compression, dropping down here. Again, I took it when it went from green to yellow. This is the daily chart. We went from bullish to bearish on that candlestick coming out of dynamic compression. And we took it, and I stayed in it just that 1 day and took 61%. That was a nice trade on the options. Again, these are all with puts and calls. Same thing on Dollar Tree. As it broke down right here, this had been bearish for a long time, as you can see, but we were waiting for a nice breakdown. I actually probably should have caught it here, but I was waiting for a breakdown, and then I got a major breakdown right here off of this drop down right here, and I took it overnight for 25% for Dollar Tree. Datadog, same thing. We get everything red or yellow. Institutions are selling. We're coming out of a dynamic compression zone. Take it right here. Take 21% profit the next day. Crowd, another nice one right here. Gap up through dynamic compression and 20% profit on this one. On Crowd, again, we're just in for 1 day on this. This was right after earnings. You see, at the time we did it, everything was green and blue. Another Amazon, this was a 45%, 32% gain in 45 minutes. Nice trade in this one. This is a 5-minute chart. This is where I get in as it came off the 15 EMA. These pink lines right here, pink arrows, that's pop out of the box symbols that the compass system put in for breaking out of compression. We have blue ones for breaking out of compression for the downside. But again, another nice one, just so you can see how I find these trades. And so I know a lot of people maybe want to get the alert service. They don't care where the trades are coming from. They just want to make money on it. But I think it's important to know where they're coming from. Here's compression, pop out of the box symbol, everything red. This is a 5-minute chat. We were in this for an hour, and it took 20%. This one I like to show. This was Verizon. This was coming off of. This is a 5-minute chart. This is coming off the VWAP with a pop out of the box symbol. And Verizon doesn't move an awful lot. It moves pennies. We actually picked up in the money calls, 70 Delta calls for 45 cents on this particular stock right here. And we were out in an hour for 50%. We get in at 45 and we get out at 67 cents. So pretty cheap. If you bought 10 contracts, it was $450. and an hour later you were out for $670. Pretty nice, 50% profit. This is I show it, a SPY super system setup here. This is a SPY super system setup. Everything went red. It was coming off the 15 EM A, so everything was bearish, and we had a pop out of the box symbol right here, giving us a bearish Heiken-Ashi, I'm sorry, a bearish super system setup on the SPY, and we just rode that thing down, and we took a really nice profit in that one. We don't get an awful lot of these. And another Netflix trade, so I don't want to bore you to death with these charts. We've got a lot of these charts, but this just shows you how the Compass system finds institutions and how I can use those to find the best trades. This was a 20% profit. And Netflix off a 5-minute chart, broke down off the VWAP, still going, notice it's going sideways. It's still, the institutions are still selling. That doesn't mean the price is going to drop all the time right away. It takes a while, and then all of a sudden it starts to come down. And Tesla, this was a 30% profit in Tesla. You can see everything yellow and red. Took it down right to the end of the day, 30%. This was when we had overnight. We actually took it off the daily chart. This is the 5-minute chart right here, but the daily chart was also bearish. And I had a pop out of the box signal right at the end of the day below the VWAP. So we took it overnight. That's always a risk. We took it overnight, but the stock gapped down, as you can see. It went from 120 to 112. And we took about $7 a contract on that one. That's the Tesla one we had before. This, I just want to show you how I use the daily chart and the 5-minute chart together. This is QSR. I wanted to trade QSR long, and I had to be convinced that the daily chart was bullish. It certainly was. Everything was green or red. So I switched to the 5-minute chart, and where do I find my entry? I'm watching for an entry. This was like 11 o'clock in the morning. Finally, I get a pop here, pop out of the box signal over the 15 EMA. Stock's bullish, the market's bullish. We rode this thing right up and made a nice trade in this thing. And again, you can see that the entry point was really important for us. All right, this is just kind of a highlight. We had 29 wins in a row in April and May. Don't do, you know, 29. The number of wins doesn't really matter that much. That's how much money you're making, but this just does show the effectiveness of this system. All right, again, we covered this. These are the strategies that we use inside the room. Straight calls and puts, debit spreads, using weekly option expirations, time spreads over earnings, weekly ATM, we call it, at the money, or I call it ATM because it's kind of like an ATM machine, selling premium week after week, credit spreads to capture premium over a few weeks, and of course the SPY super system. All right, so that's the end of the presentation. I'm going to check for some questions here. Again, these are the offers that we've got on my alert service and on the room. This is the Compass alert service right here, the options alert service. 50% off sale they're doing right now. So you put say 50 in there, that'll get a full year for $7.98, or you can take it quarterly for $2.96 by putting in save 200. That comes with a month in my room, my live trading room. It also comes with a Discord chat and SMS alert service. The Discord chat is a room we've got with 2 other professional traders that show high probability trades, answer questions for people's as well. Now, I'm answering questions all day long in the room. I mean, in the room, I'm showing charts, answering questions, calling out stocks that I think are high probability trades. And then you get access to all of the videos that I've done, about 25 or about 30 minutes long each. And this is the live trading room. Again, 50% off in the live trading room. Full year for $849 and a monthly for $148. And you also get the alert service when you take the room, and the Discord room as well. So that's for 12 months in the live trading room for the yearly one. All right, let me just see if we get some questions over here. Hold on just a second. Can you use TC2? Can I use scan TC? Yeah, I just said that already. Sorry, one question about algo lines, and if it's not the scope of this webinar, please ignore. Shall I consider algo lines the trend line connecting candles, lows and highs? It's more complicated than that, but yeah, I mean, it does connect the bottoms of candles and the tops of candles, but they're a little bit more specific than regular trend lines are, and it's something that I'm familiar with that the institutions also use with their algos. I mean, the algos draw these lines. You know, the algos can see everything. You know, they know what your exits are, what your exits are set up to be. They can see all of that. They can actually create strategies to bust people out of their positions. They'll look for MACD crossovers, know that retail traders are getting into them at that point, and then they'll turn around and drive it back down again to trap the traders in there. All right. Compass system is a subscription based, or is it a one-time purchase? It's a subscription based, and I'll show you the system in a minute. It has a scanner to identify the trade setup. Yes, it has several scanners in it, and I also use scans in TC2000 a lot as well. There will be a replay of this webinar. Yes, sir. Okay. All right. So let me just drop this down again so I can show you the. I think I've got. Get this out of here. Do I have TC2000? Let me see if I can get it up. Nope, I don't even have TC2000. I mean, I don't have Thinkorswim open right now. So I won't be able to show you that. But it does have a scanner built into it, multiple scanners built into it. It's basically Compass system is dropped right on top of your TOS platform, and it'll look exactly the same as mine do. All right. So those are the offers that we have for the trading room and for the alert service. And listen, I really appreciate everybody being here in the room today. Thanks for your questions and your participation. I know it's a long weekend, and I know it takes a lot to do that. So, one other question here: what's the difference between the live trading room and the Compass alert service? Well, in the trading room, I'm trading all day long. I'm also pointing out trades that are high probability trades that I may not take, that I'm not taking, but other people may take them because I can't take 20 trades at a time. But I'll point those out, and everybody in the room gets to ask me questions, ask me about specific symbols, etc., so we can answer questions. The alert service is going to show you the high probability trade setups that we're taking in the room if I think that the alert service should get them. The reason I say that is because if I've got a trade that I think is going to last 15 minutes, I'm not going to put it out to the alert service because it's not fair to the alert folks to get something that's going to be exited in 15 minutes because they might not even be able to get in by then. Manish, I appreciate that. Thank you. You found it was super informative. I hope so. Listen, I'm not a professional presenter. I'm not a marketer. I'm basically a trader that I try to help folks learn how to trade. Listen, I went through all of this the same as everybody did. You know, I started from losing money consistently for quite a long time, and I had to learn a lot of this stuff on my own. And I'm just really trying to. I think what I've got here is a high probability trade structure to find these trades. I think I've got the best methodology that you can get for being consistently profitable in trading, and I want to share it with people because I still trade all day long. Robert, you're welcome. All right, everybody. Well, that's I think in the chat box, by the way, if you're interested in the chat box, there is links to both of these offers so that you can get the alert service or the trading room. Trading room gets you alert service. You can get either one of those, and you click on that link. If you have any questions, you also can obviously call Rory at 786-732-4656 or drop your name and number into the question box or the chat box, and he will pick that up and see. You say Compass may be better for folks with a W-2 job. Well, the Compass system is a piece of software that identifies institutional trading. It can be good for anybody. If you're looking for swing trades or you're looking for day trades, you use the Compass system to find institutional trading. But I think anybody who's a W-2 job and they can't sit there and trade all day long, I think that the alert service is perfect for them. That's what it's for. All right, everybody. Listen, I certainly appreciate your attending today. I hope I was able to help a little bit with the with Heiken-Ashi. I know a lot of people don't know of Heiken-Ashi, or if they do know about them, maybe they don't know the best way to trade them. And I hope I helped with that a little bit. So have a great weekend. Have a great 3-day weekend. I'll be back in the room on Tuesday morning around 9:15. Hope to see some folks there, and hope to see some folks on the alert service. Have a great weekend.